subscribe. Just doing a S&P update video here as things are getting out of control. So let's look back here. This is a 1 year, 1 day chart. So here we saw SPY formed a falling wedge, right? On the way down, it formed a falling wedge, and then it resolved that wedge with a breakout. We all saw that. And then this line here was the double top. We saw the 50-day cross the 100 and the 200 kind of during this breakout, which was big, or during this falling wedge, because this confirmed for us that after this falling wedge that we would get downward momentum. This blue is the 9-day exponential. So now you can see what's been happening, or if you've heard on the news, is just drops here. And this is a ladder formation where it's just stepping down. So here it found support right here at this high volume peak, this a volume profile, high volume peak here at this trading point. And then it found down, resolved into this level here, which was an old low here, right? And now it resolved down again to this level. This green is the current price. Resolved down again, bumped up, and now you can see this kind of this formation occurring again. I bought puts today, but I only bought about half of what I want. I would not be surprised to see it jump back to this level tomorrow to a 404, and then a continuation lower again as we saw here with this up and down pattern. The only reason I don't think we'll get this bounce again is because of this. So if you zoom in here, you can see that once we had this consolidation happen, this quick consolidation, this day right here where it failed to try and recover it and just slowly leaked down and then had the next leg down, we saw that again here, right? During the day, we had actually fought to get higher and it couldn't make it and it slid down. I think now we see it resolve lower. And if you're curious about the bigger picture, zoom out to a 3-year chart. I have these marked actually. This might be a little small, but this is 20% from the all-time high, which would be a bear market. That's at your 380 mark. We're not that far from there at our 390 mark today. So it could pretty easily end up at the 380 mark tomorrow right here with that drop. And then the next kind of jump from there, and you can see these volume levels kind of tell you the same story. You have this big volume level here, this smaller one here, so we should end up briefly at this bear market level if we don't just return back up at the bear market level, and then you'd end up down here in a more reasonable PE level, right? And this is a 3-year weekly chart. You may find some support right here where this double top occurred and where the 200-day moving average is, right? That's another place that you might get support, but there isn't a lot of volume that occurred at that level. So you're more likely to find yourself somewhere in the 17 PE. So somewhere in between here in your 347 and your 335. That's probably a good spot where it could catch a breath. Also, that was the pre-COVID high. So probably a lot of support in this level. I would expect if it gets there, a lot of heavy buying. And then the next level down is probably your 15 PE. This is kind of a little more of a worst case scenario, but you can see in the last 3 years, this 15 PE is actually where most of the price volume occurred with this huge spike here. So those are your levels that you're looking for. This would be the whole way down to like a 296, 300 type deal. So this is SPY, obviously. So add a 0 pretty much for the S&P, or yeah, for the actual S&P. But yeah, that's the levels we're looking at. Any comments, questions, feedback, put it in the comments. And God bless, guys. Hope this helps.